Good morning, everyone. Welcome to Admiral Markets. We're going to take a look at the Forex market and at the price movements that we could expect today. First, though, the risk disclaimer, explaining that trading for exchange is considered high risk, just like global financial markets and products, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So please take a look at this risk disclaimer to read all of the details, but the main message here is that trading is dangerous, high risk, and you should be aware of the risks. And this webinar is for educational purposes only to give you an idea what I'm doing, but the decisions are all yours. All right? So with that said, let's take a look at the trading plan, the brief trading plan, all right, because we have a little bit of time. So first of all, we're going to be looking at the find your trend. Either we trade with the trend or against it, but we want to know what the trend is to be able, or if there is a trend, to be able to judge what the market environment is, right? If we have, for example, a specific theme, like yesterday we were looking for trend reversals, and I was trying to focus more on that. In general, though, I'm more always focused on trading with the trend, right? So that's the first step. Then we want to define what we see as an opportunity, right? Is that an opportunity that could be a pullback, it could be divergence if you're a reversal trader, for instance. Then we want to have an idea of what kind of filters we use to trade during news. If not, that could be a filter. Is there, for example, divergence? Is there a big top or bottom? Those kind of things can all filter out the trade if you think, okay, this is typical trade setup for my strategy, but because of this specific filter, I'm not going to take it because the setting is just very close to resistance, and therefore I think that I judge that this particular setup doesn't have much chance.
So I hope the microphone is better now. I changed it. Apparently it changed the settings to the basically the microphone that's on the PC instead of my own headset. Good. It's better. Great. So those are filters. Then we look for a trigger, right? As I often give an example, a trigger could be a fib or an entry. If you use it as a trigger, then you would look for a candlestick pattern at the fib, for instance. If you use the fib as an entry, you would have a direct entry at the fib. So that would be the difference. Using primarily fibs, trend lines, and moving averages. Good. So with that said, let me scoot over here to our Admiral Markets website. If you don't know the website, take a look at admiralmarkets.com. Go to education, and then go to webinars to find the webinars. I'll soon start with the charts, but just want to make you aware that you can look and add webinars to your list of viewings by clicking on sign up here, and then you can take a look at tonight, for example, Oscillators Exposed Part 2. And the next week, of course, we got the usual webinars. I think there are 6 in total, or 6 weekly webinars, right? 3 by Tarantula, or 2 by Tarantula, and 3 by me, and 1 shared. So with that said, let's take a look. Today's main focus is intraday trading. As you can see, the 30th of January, tomorrow is the last day of January, by the way, so that is also a certain risk involved when trading tomorrow. So be aware of that. Take a look at the Forex calendar. Sorry, I went to my wave analysis by accident. Let's take a look at the calendar. Yesterday we had FOMC, but that was a non-event looking at price action at least. Really nothing really happened from a price point of view. No response to that. I therefore didn't even check what the statement was. I still have to do that. It's on my list, but does anyone know more about that? Maybe you can share that with us if you like. In the meantime, though, we had China manufacturing PMI, 49.5. That's going slightly lower. Spanish GDP. We have German unemployment and unemployment rate. The end of our session, and then some lighter news until we get to U.S. session with GDP and pending home sales. Pretty long calendar today. Alrighty, I'm scanning the news to see if there's any any news about that FOMC, so I can share that with you. But in the meantime, let's head over to our charts. Alrighty, Eurodollar 5-minute chart. Looks like we're getting a break to the downside. Interesting. We've been waiting, or I've been waiting for a break to the upside, but that break hasn't happened yet. That sometimes happens when you get bigger corrections and consolidations. It looks corrective and you're waiting for a break of that consolidation, but in the meantime, this thing just keeps on growing and growing and becoming bigger and bigger, and the consolidation or channel just continues to move down. And we had that yesterday. Remember yesterday we were looking at the potential for the currency. Let me get rid of all of it. It's just I would have to do too much investigation. What is which fib? So I'd rather start with a fresh chart and put this fib on, which wasn't on the chart yet as yet. This fib, of course, famous in the meantime because it provided guidance support at the 38.2, at the 50, and at the 61.8. Right. So if you were in the short and you took that counter trend short, then you know what the target should have been. Obviously, the 61.8 at 136.07. There was no other target there available because there was definitely no guarantee that price would break through 61.8. It is a golden ratio of the Fibonacci sequence, right? Series numbers, so very important level, and that's exactly where the price bounced off. Made a pin bar and continued up again, but couldn't break this resistance, right? Couldn't break it. Let's put a red line there. So we got this. We have the trend line connecting the tops, and we have a red resistance at a 136.80, 136.90, important level, important top. So that was yesterday, a drop and rise, just like the day before, drop and rise. Drop, rise, consolidation. Drop, rise, consolidation. Will we have that again? Drop, rise, consolidation? Maybe. The next target would be the 78.6 at 135.72. So it looks like the price is heading that way now. This morning, prior to this hour, at the beginning of this hour, it was still in the consolidation. So there was a potential for price to break out to the upside still, right? It was still stuck in these magenta lines. So this break to the upside would have been, in my opinion, nice, better to trade. But it looks like we're breaking to the downside now. And it's a breakout candle below magenta. So we can wait 7 more minutes to see how this hourly candle looks like upon the break. Does it have a big wick? And does it close right where it started? Well, then it doesn't look that great, this breakout to the downside, does it? If there's a good bearish candle, then that increases the odds of indeed a sustainable move down, maybe to the 786. So that's how I would look at it from a intraday perspective. The long term, I don't want to maybe dive into that too much. We discussed it earlier this week, more intense and detailed. But basically, if we break that bull flag, if we can put a bull flag, of course, here as well, like this. If we break that bull flag, the idea is that we can move up to the -272 and the -618, but that hasn't happened yet. Of course, there's always a chance that we stopped at this 618 fib of this down move, and therefore this is a pullback for more downside. That's always possible. Right? We never know. We never know. We don't want to know. The only thing what we do know are facts, and the fact is that we have a daily uptrend line right here, right? And price bounce off that. That's a fact. We also have a resistance here at the 61.8, and we also have support fibs. What does that mean? That means there is a potential, if we break below magenta, to fall here. That's something that is reasonably sure. Whether we break below the 78.6 and break this trend line, the daily uptrend line, that's something that remains to be seen. Do we break above magenta and move up to -272? We will find out. If we do that, then that would be a good breakout trade. right? So based on these facts, we can make reasonable assumptions. So let's see. Time will tell. We will see in 4 minutes, first of all, if this hourly candle has a good close, and then whether we can get that indeed that counter trend fall to the 786. Then I would expect a bounce, and who knows, maybe finally then we do break to the upside. If not, and we get again weakness, we could maybe see the continuation down again. So that's basically, if you look at these arrows, the most likely path here. Right? The further we go in time, of course, the less clear it becomes what the path will be, and the more options and variations there are likely to be, right? After down, up, after this fall and up from the 786, it depends how price will move. Will price move correctively? Then it's a bear flag and we can expect more downside. Or does it jump up like this and make another bull flag? Well, we can expect more upside. That's difficult and depends on price action, how it responds to certain levels. Pound dollar. The monthly candle. Someone's asking about the monthly candle. Let's take a look. To see the monthly candle, I'll just take off the chart because otherwise it'll take too long to put the time frames in. This month is, yeah, it's depends where it will close. If it closes higher, it has a decent wick at the bottom. If it closes lower, it's even actually quite bearish candle. It hardly broke last month's low though, right? The difference is 17 pips. So that's really no difference between this month low and last month low. There's hardly any difference at the moment. So with that said, if this candle closes something like that, it's almost looking like an inside candle. Almost. It isn't, but close to it. Therefore, if the higher this closes, the more bullish pressure I would expect in February. The lower this closes and maybe even breaks this 134.98, which I don't think it will happen within the next 2 days, then the more bearish this becomes. But for the moment, because we had so many upside candles here in this up move, look at this. We had from April last year, we had one, well, this is actually more of a wick, so let's not count that. 1, 2, 3, 4, 5 bullish candles, 2 indecisive, and 2 bearish. So it's about 5, 2, 2. So that definitely shows the slow uptrend, right? Nothing spectacular there, but it is moving up. So this could be just an in-between candle like we've had before, and then February could be up again. That's what I would think at the moment. Unless I see good reasons on other time frames and breaks to the downside, then of course things change. If you look at the daily chart, I'm particularly keeping an eye on this trend line, for instance, and of course this bottom, 135 level. Things will definitely, the long-term picture will definitely change if these two things break, right? It just wouldn't be the same anymore. If we look at the daily candle, we had 2 days now with big wicks at the bottom. So we got to be careful of yesterday's low as well at 136.04, by the way. We don't want to sell right in front of the low. Never do that. Right? That's always a potential bouncing spot. So we got 2 wicks yesterday and the day before. So maybe this is a retracement again, maybe not. In any case, with 11 pips, 10 pips to go to the daily bottom, we don't want to be shorting there, or I would never do that. So let's take a look at the hourly. What do we got here? We have a candle just closed, in fact, about 20 seconds ago or 50 seconds ago. That is a bearish candle. pretty strong candle for this time of hour. It's pretty early, right? It's pretty early, and it's about close to 40 pips. That's a lot at this time of day for the first even open. Now, did it make sense to go short right at the open of that candle? No. Even though it moved down a few pips, I don't think so, because in my opinion, there's not enough potential reward down to the daily low compared to the risk, if not even higher. That doesn't add up to me. Not on the 1 hour perspective. Maybe there's a 1 minute scalp to the downside here, I'm not saying, but I don't look at that. So for me, even if it is a counter trend move, there is a potential, but not here right now. The only possibility would be if this 1 hour candle gets retraced at least about halfway. If that were to happen, you reduce your risk and increase your reward potential to a balance that makes at least some sense in this relative counter trend trade. All right, so hope that makes sense. Now, of course, it could fall, but there's no other way but to sometimes ignore potential moves that you find interesting, if you do find this interesting. If not, no problem. If you find this interesting, then there's no other way than to filter out certain trades. Otherwise, you're just, in general, everyone would be taking too many trades. In this case, the filter, basically, step 3, I think it is, right? The filter is reward to risk ratio, a very important filter for that matter, or in that way. So let's see if we get the pullback. If you like that trade, really depends if you like to trade counter trend trades in a way, although the term counter trend is maybe becoming a bit obsolete with this channel to the downside, right? There is a bit of a question mark what the trend could be here, if it's still up, in fact, because we're moving down so long already. So from the hourly, this is already a downtrend. So if you use the hourly as a downtrend, then you wouldn't consider this as a counter trend anymore. Any hook back would be with the trend short. So this too depends on the time frame we use, or everyone uses. Cable is breaking below magenta, and that too breaking triangle to the downside. Had a lot of headache here, a lot of ups and downs, but eventually couldn't find the energy and momentum to break to the upside. So what would be the target of this downside break? The pound dollar already broke the bottom. So this aids the fact that the euro dollar is probably downside too, because the pound is breaking a triangle to the downside, and it has already broken this bottom here. At least one bottom. There's, of course, one more bottom. It's 164.70. What would be the target? Well, we bounce off the 786, so the first target is 164.20. Then the next target will be 163.50. Right? That's what we're looking at, potentially. Down to this daily support level. Now, there's one thing, though, that we have to be careful of, is that this pound dollar could be the bull flag as well. Maybe not so likely at the moment, but it is possible. So here, too, from my perspective, it wouldn't be the best place to short. It would only make sense on a hook back as well, because this could be, again, a bouncing spot. Probably not, because there's some momentum driving it, but at some point there is going to be a bounce before we potentially drop. So with that said, I would still be maybe a bit more careful here at this spot, right? Just like the euro. So keep an eye on that. The daily, no, this is the 4 hour, sorry, 4 hour charts. If we put a fib from bottom to top, we have hit also the fibs, right? The 50, the 61.8, now maybe the 786. So there's another reason why we could look like, this could look like a bouncing spot, sorry. So Adrian says that he's waiting for a retrace, which makes a lower high. And I think that makes a lot of sense, because this already has moved. So better wait for the retracement. Absolutely. Totally agree with Adrian on that one. Ravi is saying it looks like a bullish flag or descending wedge. Well, I guess this is one of those cases where you can have definitely multiple patterns. You can see the multiple ones. To me, this definitely looks like a bull flag potential with this as an impulse. I totally agree with that. Then again, if you look at it from the 4 hour perspective, this altogether is looking like a triangle and a break of the triangle. So yeah, both are valid. Adrian is adding, though, that considering the FOMC yesterday, that he would take it to the downside. Was there some? I have an article open here trying to find some news. Has the Fed left emerging markets out in the cold? I don't know if that's. It says that the Fed on Wednesday concluded a 2-day policy meeting with a decision to unwind its massive monetary stimulus program by a further $10 billion. But there was not really a big price reaction to it, does it? Oh wait, there's the main article. Let me go to that. Yeah. So with that in mind, indeed, Adrian, now that I've read this, you could see some fundamental news driving the dollar strength here. So in that regard, from a technical point of view, it would be good to wait for that lower high and see if we get a respect for that level somewhere, right, on hourly chart or 50-minute chart. As soon as we cannot continue with posting higher candles, wait for 5 candles here, then we probably won't get a higher high, and we could see that fall, and we know that this is probably a lower high then. Your pound is stuck in nothing, right? It's just going sideways here. Aussie, let's take a look. Aussie not dropping as much as the euro and the pound. That means that the euro AUD and pound AUD are moving down. The Aussie, after the break of this bear flag or channel, is moving down, but not maybe as fast as I would have thought the break would have given, but it did move down. Now not moving along with the Aussie though, I mean with the euro and pound. Let's see. This 50-minute chart is in a downtrend, certainly. So what we could look for is a continuation of this Aussie to the downside as well, just like the euro and pound. If we get the retracement on those two, a continuation would be, for example, break below this purple line, the lower one. Let me make this color a bit different so we are sure that we're talking about, that you know which one I'm talking about. 1 second. Let's make it orange. Right? Below orange, we could see a continuation of that to the downside. The target of that break would probably be the bottom, because there could be a fall from 87.18 down to 86.60, right? A break of that orange would have that potential. Otherwise, we're in a nice downtrend channel. just that the Aussie is basically waiting for its turn to move down, in my opinion. That will probably happen after the euro and pound have fallen and the euro odd and pound odd have fallen, right? Those crosses are being moved. Not the whole Forex market moves at the same time. Always remember that there are certain hours that one currency moves more than the other, and then the other pair goes in consolidation, and the next one starts to move, right? Not all pairs can move just as much at the same time because you got the crosses moving at the same, you got the crosses as well. So now the euro and pound are moving, right? And the Aussie is standing still against the dollar, right? And the euro and pound are falling against the dollar and odd at the moment. And the Kiwi apparently. So maybe it's the dollar that's moving and it's just Aussie strength at the moment. That could be too. Dollar is moving up, so maybe it's the more the dollar in fact than the euro and pound. Dollar Swissie is moving up. Dollar CAD is moving a bit up. Kiwi is falling too. Back to the daily support. Boy oh boy, is this a choppy move? Dollar yen. Dollar yen is moving up too. Dollar yen did break this triangle to the downside, but I said watch out for this bottom, right? That's not a bottom that could break easily. In any case, not that that bottom is so important, but the fact that the 38.2 fib is there is of course crucial. That's why this hook back still is important, right? Because this could be just the first move up for a hook back for more. That bottom is crucial. If that bottom breaks, there's a good chance to fall to the 50 fib, and that becomes support. But we didn't break the bottom. That's why fibs and support and resistance are so important. We didn't break the bottom, therefore the 38.2 fib could still be key in this analysis. Why? Because that's a daily 38.2. Right? This is a breakout, a weekly, monthly breakout. Draw the fib from bottom to top if you have such a weekly and strong weekly, monthly trend. And obviously, the 38.2 is key, very key. And we did bounce. We bounced, but then broke to the downside. That break is not a bad sell necessarily, although I didn't take it because I don't want to sell the dollar yen because I already saw the potential for more upside here. So I was waiting for a break of this. That didn't happen, but it doesn't mean that this bottom will necessarily break because this magenta breaks. There was maybe a short intraday trade, but as you can see, there is that potential still for the dollar yen to bounce up. Will it happen? We don't know. But basically, there is that potential, and I'm waiting for a confirmation of that, which in this case would mean price needs to break above the green and above magenta before the green band and magenta trend line before you can consider this a breakout trade to the upside. Because for the moment we're still in a downtrend on the hourly, but we have the daily support and 4-hour support that could kick in and send us back into the monthly and weekly uptrend. Right? So that would be, let's see, that's the dollar yen, and then we'll take a look at the euro odd, Sebastian. No problem. Glad that you made it despite the traffic jam there. So to me, definitely still has that bullish potential, although it's in a downtrend on the hourly. So I hope that makes sense. All right, so let's see, anything else to add? I don't think so. I think everyone is well aware of the weekly, monthly uptrend on the dollar yen. Everyone is aware of this breakout, potential hook back and go. So I don't think we have to, ponder about that too much. We can just take a look at the 15-minute and consider if basically there's even a potential maybe from intraday perspective to take it up before we break this magenta, right? Magenta trend lines is of course pretty far away from here. Sometimes it's tempting to trade it earlier than that break. You have to be careful with that, but maybe on a 50-minute chart it could make sense. So let's take a look. The 50-minute chart basically in a downtrend still, because price is at the green band, right? Look at this. It made some steep fall, and I said that that's a lot of momentum. So there could be some smaller push still left. And indeed, we made that smaller push without breaking green, though. That's key. Then made a bounce, right? Up to the black band, made consolidation at the black band, and broke from black band to green band. That is usually so when we're making a retracement. Usually the retracement goes to the black band, pauses, then if it does continue, it goes up to the green band. Of course, it doesn't always go to the green band, but if it does, that would be the target. Sometimes the black band is strong enough to hold it and send it down again. In this case, not, because of course we have the bigger fib at the 38.2, and we got another break to the green band. Once the green band breaks, then we're really looking at a potential trend change on this particular time frame. Right? So a break above the green band could be a breakout, a counter trend break basically up to magenta and this resistance. That is possible. I took those lines a bit off too soon, so that's possible right there. It's an early one, mind you, but it's a very early one. Let me take a look at this other template I have. You can see this long-term moving average is still red. So preferably I like to see it blue and up, pointed up before trading it. So it's still a bit too early from my perspective. But in theory, if this would be just slightly up, you know, and then the next push would be better, would be good. Let me take a look at the monthly candle. We got a great comment from Veshna about potential railway candles. So let's zoom in there. Yeah, that would be a bearish railway a track indeed. Definitely looks so. I mean, it's almost like a classical or ideal, an ideal one. If it closes like this, we still have 2 days, of course. If that were to happen, well, that could be bearish then indeed. Yeah. Then I would have to, you know, reassess the analysis. Of course, it is a very important candle. It's still just one candle, though. You know, the thing is, the candles are great, but still, they're just part of the picture, of course. That's why I like multiple time frame analysis. But obviously, there are tons of examples also that work well with you know, single candlestick analysis like this. And if that were to be the case, it's something we definitely should consider. And that could be bearish indeed. So we've got 2 days left. We'll have to reassess it on Tuesday together and take a look at how these dollar-yen monthly candles ended. You know, will there be basically what the question is the next 2 days? Will we see a push up here or not? If we do, then the monthly candle will basically end up here with the wick at the bottom, right? If it ends up with half of a wick, there's already some buying pressure within this month. It doesn't, then it's no, yeah, you couldn't say it's a railway candle. If it doesn't, if it closes like this, then it would, right? So time will tell. Interesting though. Thanks for that observation, Vesna. Great contribution there. So something to keep an eye on, definitely. So let's take a look at the Euro AUD. Let's take a look together here. Oh, that's the pound AUD, sorry. Euro AUD. Euro AUD is indeed breaking to the downside. We had a break to the upside, but that break was pretty slowish, right, so far. Difficult to know sometimes. So, you know, we cannot always predict, of course, how the break will respond. We don't know if we get, most cases we don't know. We have certain clues we can use, of course, to gain an advantage, whether the break will be impulsive or corrective, but it's not an exact science and not always will be right. Personally, I did expect an impulsive break. I didn't take this trade to the upside, but I certainly had it on my watch list and was thinking of doing that. It's just that it happened after I closed trading yesterday. Otherwise, I probably would have taken it. This break isn't doing too well, though. And it depends on the trade management part, you know, how you handle it. If you trail stop the fractal, for example, the 1 hour fractal, then that's okay because you just exit it at around break even. I think this trend line, this channel was from yesterday, this trend line would have represented the new break. But as you can see, small break, small pullback, and continue, but I continue and failed. No follow through there for whatever reason. More euro weakness than AUD weakness, despite the bounce on this euro AUD to the upside, right? The bounce at support here. So that bounce is not getting a follow through. So with that said, the 1 hour chart, it's still a bit early to tell how far this break to the downside can go. How much euro weakness can we get compared to the AUD? It's early because we're still above the green band. But one, of course, potential target, if we put a fib from here to here, is the 272 or the minus 618. That's could be a zigzag here for downside. It's possible. Let's take a look at that zigzag potential here on the 4 hour chart. That would mean, once again, down, up, down, and maybe then again up, right? I think that this could be maybe even, could this be a Gartley pattern even, potentially? I didn't put the Gartley indicator yet on my chart, but that Tarantula shared during the harmonics webinar last week. But I think this would be one. I'm not 100% sure. I think this is the Gartley, but I'm not sure if this is high enough to qualify, but I think so. But in any case, it doesn't matter. That could be a potential. So one way of knowing that is, for example, if we break above this, below this green black band, we could fall to green band. And where's the green band? Right at the same spot that's minus 272. So there could be a fall, for instance, from this 155 down to 154, right? Something like that. That could be a potential. How about the hourly? Well, the hourly would have to basically, we're looking for a break below the green band, right? We're looking for a break, pullback, and respect of the green band for more downside. That's probably what we're looking for on the hourly. Then it would be interesting short there. How about the 15? 15 is still an uptrend as well, right? Price was above the moving averages. So here, what are we looking for here? Also basically the pullback after the break still. It's still early. It's still early despite the break of this trend line. There could be some fall, but most likely sooner or later there will be a retrace. I think it would make more sense to wait for the retrace due to the different time frames showing a very, very early turn here to the downside, and by certainly not in a confirmed downtrend, in my opinion. It is making that downside, but we need to be careful still. Uh, 54.73. Yeah, 57 is certainly a support level. Definitely. we can put a fib on this very first down move, and we can see a 618 hit here. So, any of these fibs could be the target. If we look at these time frames, these moving averages are still all bullish, right? All of them are lined up. Most of them are all lined up to the upside still. So I'm not saying a break to the downside is not possible. It surely is, but we do want to be maybe on our guard. Same story for pound odd. Absolutely same story. Look at this pound odd, okay? Take a look at this. Where is price? It's still above the black band. The black band is still pointed up. The green band is below the black band and pointed up. Most cases when that happens, the trend is up. So maybe this down move is something like this, just a retracement from our upside. Maybe not. Maybe this time it's different. In any case, it's not all too clear yet. That's my point. For me, the better short would be if we really have at least an hourly downtrend. Alrighty, folks. Let's see. Anything else on this pound odd? We can take a look at the longer term picture if you want. How far can this go, this uptrend? I think that we still have some space up to 194, or to be precise, 193.83. Why? Because there is a minus 618 target. I think that that is the target from this weekly perspective. We had an upside, strong upside, hooked back to the 23.6. We broke above minus 272, hooked back to it. That would be the target in my opinion. How far did we get? We went up to 192 or 191.80 to be precise. So there's still another 200 roughly 200 pips there. This week so far is actually a small inside candle, very small inside candle somehow. I don't know why, but so that's why I'm not saying there couldn't be some counter trend shorts there, but there are definitely reversal trades as long as we stay above this weekly low, last week's low at 185.25. And once again, there could be some drop here, but it's definitely reaching into a potential bouncing area from 185, 186, 187 up to 193.80. How does the monthly look like? Monthly, big wick at the bottom, small wick at the top at the moment, but that all depends on the next 2 days. Before that, we had strong bullish candles, just like we had before here as well. So in that regard, still looking bullish, but we have 2 days left. Will be interesting. We'll take a look at these monthly candles just for the fun of it together, or at least some of them. Next week. AUD yen, looking for the downside here off of that level, 91. That's exactly what happened. Moved down about 200 pips after hitting 91. So anyone who took a short there is smiling, a big smile at the moment. That was a great downside. So what do we got here? The 4-hour chart hooked back to that level, which was a 618 fib as well. Let's see, anything else? Well, the target is below here at 87.35 and 88.590, but we are close to a bottom, okay, right there. So we have to be cautious, just like the AUD USD. of course, is also looking for a break of this orange line, which we're not getting. The Aussie yen too, we would probably want something like this to break, this purple one. Let's take a look at the dollar CAD. Kaylin is asking about it, and we didn't look at that one intensively, just a quick second only. So this is the dollar CAD, and while the CAD weakness did eventually continue, or is it dollar strength today? In the past, there was certainly some big CAD weakness in the market that drove this upside very strongly, and after some small consolidation or decent consolidation at 110, we got a break, pull back, and go. That break, pull back, and go is still on the way, and we're just poking outside of the top. How much did the top break? About 15, 20 pips. It's not a lot as yet. Certainly not a lot. Let me take a look at this hourly perspective, okay? I'll put a trend line here. We will take a look at this trend line as well. Something like this. And we can see that although we respected that line a couple of times, we also broke out of that now. So difficult to tell at the moment. I don't like the smaller break, and to me there are only a few candles above it, so I would say the break is still hanging in the air here. It's not too clear to me, and therefore I would rather be careful still. All right, maybe the broken level could become support at 111.80, 111.70. Definitely, it's not impossible, but the breakout is not clear enough to me, so I would rather be on the guard here and wouldn't necessarily want to trade this bounce as yet. From the bigger perspective though, there's definitely still space up to the -272 target at 113.28. The only question is, will that happen now or later? Will we first retrace deeper back to this purple bottom and then bounce, or use 111.70 and 80 for the bouncing spot? That's something that I wouldn't want to risk anything on personally. But in the longer term perspective though, if we make a nicer retracement, there is that potential to do this. If it doesn't, then we could probably put a fib like this, and anywhere where we have the trend line confluence and fibs, like the 618 here, would be a bouncing spot. If the price goes slower, then the 50 would be the bouncing spot maybe. Or if it really goes very, very shallow, even the 38.2, right, as this trend line marches forward. If it drops like a stone, maybe even the 78.6 could be the bouncing spot. But then if it does drop fast, then I wouldn't expect a break, but I would expect a triangle first, like this, because that's usually what happens. If you get a big retrace, a fast retracement, fast impulse, then the bounce will only have a limited scope, and you'll get a triangle probably. That's why triangles exist, because you get a fast counter trend move, buyers step in, but they're not expecting a break of this top immediately. Therefore, price still moves down, then moves up again, then moves down again, and then up maybe for the break. And you get this triangle. So, yeah, that's possible. That we're basically in either in a rising wedge. It doesn't look like a rising wedge anymore. It looks to me more like an ascending wedge, which is bullish in this case, right? 1093. 11093. Sorry. Well, it's possible, but then it would be breaking this bottom already. So if it breaks the trend line and this bottom, well then, and this bottom, the 4-hour support. If it breaks 4-hour support, then it definitely starts to alter the, in my opinion, it starts to look a bit different, the whole situation. I can see your point, 1093, there's this, maybe this bottom here. No, that's something else. Sorry, I'm getting the time frames mixed up. 1093, sorry. Let me put a green line there so I don't get confused. That's here. Well, it's definitely possible. It's still at the bottom of this band, so it could go there and bounce. I'm not saying. It is possible. But it doesn't have to go there. It would be equal to the green band here. That always, roughly speaking, could be a bouncing spot. It could be a bit lower too, it could be here, but roughly speaking, this band is a support level. Plus this bottom too. So there are multiple places where it could bounce. It could bounce now, or before this bottom, or at these moving averages. Let's take a look at the New Zealand yen. New Zealand is indeed strong relatively to the others. So if there's anything good to short, then it's New Zealand indeed. That's very true. It depends on how much this yen weakness really kicks in. So far, we have no confirmation of that, and it's been not much of a weakness trend continuation as yet. If that indeed, if we indeed continue with the yen strength, or sorry, fail to continue with the yen weakness, then this New Zealand yen, of course, is a better candidate than I would think than other yens, because New Zealand is relatively strong indeed. So, New Zealand yen. It has the green band pretty close by here. It has about 40 pips left to the green band, but okay, we can put the green band, the lower green band here in play. It could also go to the lower part of the green band, so it could accelerate and pass that first support level, right? It's not an exact bouncing spot. 4-hour, definitely in the downtrend. Hourly had this great break. I'm sure we talked about it, that it had this potential channel. Not 100% sure, actually, but I remember talking about this with other traders, that this is a potential correction for more downside. That's happening right now. Let's take a look at the 15. And yeah, we see a smaller break of this, something like that potentially, right there. So yes, there could definitely be a breakout scenario here on the New Zealand yen. Yep, it would be more of a continuation trade, because we had the first breakout was all the way higher, right? The first break, pull back and go. Then we had a smaller bull flag again, another break. So this is already the first, second, third break. Of course, the more breaks you get, the less likely that the trade will materialize. This was a first break and pullback, then another break and pullback, and maybe this is again a break and pullback. But it is the third one, so eventually there's going to be maybe a bigger bounce. Let's take a look at the targets. The target is at 82.74. There is a good hourly candle below that purple line. So there seems to be a good hourly break, a decent hourly break at least, of that trend line. With that hourly break, with this trend line broken, there is that decent probability to fall down to the minus 272 at 82.74, which is approximately 70 pips away. What is the risk at the moment? Well, let's see where the 1 hour top is. It's about 83.77, so if you put it at 83, then that's about 40 pips away. So that's a decent reward to risk ratio. There's nothing wrong with that. Right? If you get a smaller pullback, obviously that R to R ratio improves even further. So yeah, that would look good. I would just want to take a look at the dollar yen. If the dollar yen starts to break to the upside, of course this yen will make that retracement to the upside. We might also want to take a look at Euro New Zealand and Pound New Zealand. New Zealand is weakening against the Euro and Pound. Against the Euro, at least the Pound, let me take a look. It recently moved up, but still in a massive consolidation, and we're actually at a resistance spot. So the Pound could maybe have struggle here to move up against New Zealand. The Euro New Zealand also quite choppy, but is moving up. So let's take a look at the Euro yen, because if the Euro New Zealand is moving up, that means the New Zealand yen is actually, no, the Euro yen would be falling even more, probably. There's Euro strength more than New Zealand strength. So the Euro yen could be, no, that would be the other way around. Sorry. Got it mixed up. Got the correlations mixed up. If there's New Zealand weakness, then more New Zealand weakness, than the New Zealand yen is probably falling more. Sorry. Too early in the day to think about that. So, but anyhow, Euro yen is also moving down after a sturdy fall yesterday. 200 pips down. Almost in one shot. If I'm judging to calculate, that 200 basically is just one fall. Pretty impressive. Hasn't reached the target as yet. The target would be this 138.40. So the Euro yen also nicely moving to the downside. And this is actually broken a smaller bear flag on the 15-minute chart, or smaller wedge as well. After yesterday's fall, we got this wedge now breaking. That looks good too for another maybe potentially 100 pips. If it hooks back a bit higher, that would be a good fall too, right? We've made a run down in the 50-minute chart here, small one, so maybe a hook back for more fall is possible. That smaller hook back basically is within the context of a big fall and another fall, and then something like that could happen. So Yeah, the other yen pairs are definitely looking more bearish than the dollar yen in my opinion. Although the dollar yen is bearish, it's just that bigger fib is right there. Oh, the euro yen also has that bigger fib, by the way. But the thing is that the 38.2 is a possible bouncing spot, but not always the bouncing spot, right? There could be the 52. So if that were to happen, then we have space to 138.50, which is the 50 fib. That's the level we want to be aware of on the euro yen. That's definitely a key level you don't want to mess around with. 50 fib certainly could provide a lot of support. So if we then look at this chart again on the hourly, then what do we see? The minus 272 is right at that weekly 50 fib or daily. So very important. 138.50, be careful of that. Right? That's either your TP if you're shorting it, or it's even a potential entry zone if you're looking to catch a continuation potentially of the year end to the upside. Maybe it doesn't materialize, but if you want to give it a try, then that could be a zone where you might want to zoom into the 5-minute chart to see some oversold positions on that downside, and there could be that's something, of course, that's always your choice, but there could be reason to believe if there's oversold and divergence on lower time frames in a bouncing area like that, then that's a potential spot where you can get a long after the divergence has played, is apparent, where you can get along with a pretty tight stop loss and a big potential. That takes a bit of a hunting and patience to wait. It's like a sniper. You're waiting for the price to drop, hit the target, then make some consolidation. Then you see one more drop, and you get divergence on 15 and 5-minute charts, right? But it all happens very close to the 138.50. Well, then there's always that potential that is the turning spot, and you get maybe the day after a bigger bounce, and the bulls take over, and this, who knows, this continues up for a good run off of that 50 fib. Maybe not. Maybe it just bounces a bit and then moves down to the 61.8. But in any case, there's a fair chance of that bounce up with the limit, relatively small stop loss. Right? That's something that traders can't think of. All right. So, those things usually happen at the end of London or after London is closed, because that's when the volatility kind of dies down and you get the intraday. Basically, the intraday movement is over. The power there is over, and then you get some smaller consolidation. It doesn't bounce up right away because there's still some downside pressure, and it just breaks a bit, and then the bottom breaks, and then London is over or just about to close, and it goes in consolidation like that, and then tomorrow we might get a spike up, right? Something like that. So it looks all messy on the smaller time frames, but there's definitely that logic behind it of a turnaround, potentially. Alrighty. So, does anyone have a particular currency pair in mind, maybe, to look at? What do you want to see? Yeah, if it's a good trading day, well, good question. I don't know. Well, it is true that I would have liked to have seen a bullish bounce, because that would be in line with my bigger time frame analysis. But if it doesn't do that, then yeah, then I'm not excluding shorts down to the 50 fib. and minus 272 target. It's just that basically, yeah, it's less favorable in my opinion. That's all. Yeah, number of opportunities. Yeah, basically, at the moment, either euro dollar or pound dollar, euro out or pound out, but that's early still, right? I said maybe this euro yen. Yeah, it doesn't look too great because the Aussie is retracing, which is not with the trend. Not fantastic indeed. Let's see. We got some requests. Some we haven't looked at. Some pairs we already did. So I'll just the pairs we already analyzed earlier. I'll just do a bit quicker so I don't bore the others too much. Okay. But the dollar yen basically, well, potentially has railway candles. Let's see. I think that was Veshna that reminded us of that. Or let me check. Yes. So that's possible. We have to see how this monthly candle closes. The weekly is getting a wick after this bearish candle, so you know that potential daily 38.2 bounce, maybe it's not going to hold. Maybe it's not the bounce turning spot. But for me, the key level to that, whether we know whether this is a bullish bounce at 38.2, are these levels. We would need to break below this green 101.85 to fall maybe to 101.20. Or do we get actually a break of this purple line slash maybe this trend line like this for a bullish break to the upside, and then we did get a bounce of the 38.2. It's too early to tell which one of these would happen. But I'm waiting for the green or the two purples to identify which of the two is more likely. Euro dollar, also one we already looked at, but I'll take a look quickly. For you, no problem. The euro dollar is basically making a bull flag, or it's a downtrend channel. We would need to break to the upside here above this resistance as well at 136.80.90 and above purple for the bull flag to materialize, and then we have a potential for the price to move up to 138. In the meantime, though, there is a potential also to fall to the 786, but that could only happen or make sense if it were to hook back to this trend line and bounce and then move down. If it doesn't bounce, we could break. Right? At this moment, we're too close to yesterday's low, in my opinion, at 136. This could be still a bouncing spot. So either a move back to 136.50-ish would be needed, and then we need to see the bounce or break. Both could be interesting. If we do get the bounce to the downside, the 78.6 fib could be important, and the target. If we get a break, then the minus 272 at 138, 137.90 is the target. Adrian, are you talking about that Bollinger Band strategy by any chance? Let's take a look at the pound yen, by the way. In the meantime, as I wait, just curious what that Adrian, which strategy he's referring to. This is the pound yen daily chart here too. Okay, that's the strategy that I know of, but just be careful because yeah, that's the one I presented, indeed, the Bollinger Bands, right? Yeah. Just be careful, though. I haven't traded it in a while, so you would definitely need to test it yourself. Right? So sometimes market conditions change, and you know it's something that you do need to. Strategy like that is something that you definitely need to be aware of. That things, properties can change. Fibs, I think, never change. Right? Those will always remain there, but. The pound yen also the 38.2 fib, right? Same story, EJ, pound yen, dollar yen. So here too, looking for a break of the 38.2 fib for a move down to the 50 fib potentially. or here too, waiting for a break above this for a move up. Right? So simply put, that's really what it boils down to, in my opinion. We can make it a story long or short, but that's it. Break above here or break below here. Just calculating how much it fell yesterday. It was a pretty good fall, in fact. Let's take a look at the 15. It was a very steep fall. About 200 pips. Pretty impressive. Well, anyhow, that was that. And now we could be making a smaller 50-minute bear flag here. So that too could have the potential to hook back and fall again, right? So that if there's anything that probably that would make the most sense at the moment, with a mini target here at this bottom maybe, right? Or the 886 fib. Let's put a fib just in case on this upside. 886 fib is at 168.23. But at the moment, we didn't get the breakout to the upside, and we got an impulse down of this trend line here. So this could fall and continue. The euro dollar and pound dollar are falling, so that would also stimulate this euro pound yen to fall as well. Alrighty. Let's see. A question about gold. Let's take a look. Gold is really not moving much. It's in this upside channel like this, and basically had a very good downtrend, of course, here, a strong pullback, continue with the downtrend, and a recent breakout of the downtrend, right? But that break is going in a very shallow channel. Look at that. This black trend channel broke, but look at this, very mild angle, but still moving up and up and up. So either this channel breaks, or we can see a bounce, right? Let me do that the other way around. It breaks with the red arrow, or if we see a bounce here, it could nicely continue. Basically, that's what I would be looking for on the XAUUSD. And then we have one question from Kaylin regarding the euro yen. How does it respond to 139.09? Which definitely could be a bouncing spot because of this, or at least the stopping spot because of this bottom right here. Although the thing is that it's a pretty, wait, am I getting it mixed up here? Yes, I'm getting it mixed up with the pound yen for a second. 1 second. $130.09. I think it's not that important, though. I mean, of course, all these support levels will have some influence in the market, but in the grand scheme of things, this is only the, if you zoom in, this is only the 1 second third bar. So if we would have had 5 or more candles here that didn't break this low, that would be very important. This is a bit of a pin bar, I know what you mean, but you know, this is still within the impulse down. If we don't break now or the next 8 hours, then things change. But the moment I would consider this still one fluid move down for the moment. So I wouldn't, I think with this speed that's which is falling, we could see a break to that level. We would maybe see, maybe this could provide a bounce up and then a hook back for more downside, for instance. and then we could see maybe this to the 50 fib. Entry, you're searching for entry. Well, I wouldn't do that here though. That's definitely true. No, not definitely. I wouldn't do it here. That doesn't make sense to my opinion. The break of the moving averages made sense. The next thing we would have to wait for is, in my opinion, some consolidation. Or you must take the break of the bottom. If you take the break of the bottom, realize that your R2R is not so good, in my opinion, because then you have this potential reward, but you would have to put the risk at least here, your stop loss, which basically means your risk is bigger than your stop loss. So that doesn't look too appealing to me either. So I would say the only thing that I'm interested in is a hook back, a lower high for more downside. That's really the only thing that makes sense to me. Alrighty, folks. I guess that's about it from my side. I wouldn't know what else to share. I think we looked at all of them, I think, that we normally look at least, with the exception of some more exotic crosses, maybe, like odd cat. Pound cat, what is that doing? It did bounce, but is now falling again due to the pound weakness at the moment. Odd cat isn't falling because of the relative odd strength that we see against the pound odd as well. Dollar index getting the bounce up. Let's see, what else? That's about it. We have some more exotic crosses, but Eurocat is struggling at the top as well. Pound Swissy looks to be in a downtrend at the moment, so maybe see some continuation of that downtrend upon the break of this consolidation. Not too big of a fan of the pound Swissy anyhow, or the euro Swissy, but funny enough, although gold is in an uptrend, doesn't look so that much on silver. Silver is actually just keeps on moving down, rather choppily. Big consolidation here, you see that? Well, folks, one thing I still want to mention for sure is that today we have oscillators exposed at 5 p.m. GMT and 6 p.m. Central European time. I also, by the way, saw Wolf on Wall Street yesterday, a movie about a guy who made a fortune, billions and billions, I guess, by as a stockbroker, and DiCaprio was playing this role, scamming clients, exactly, or not maybe not as a stockbroker, but as scamming clients indeed, scamming clients. I formulated it very political correctly. Well, it was interesting, I guess. I have to admit that when I walked away, I felt very happy about my own life, looking at his screwed up mess, despite his wealth. So he just sees that. This shows that, yeah, certainly wealth is important to reach certain targets in one's life, but you can see that if one doesn't have a certain focus or vision on how to maybe design your life, it could be quite messy. Well, it depends what you want. If you like that messiness, then that's fine. I totally don't like it, to be honest. So I was glad that I don't have that. But maybe other people love it. I guess it's an addiction on its own, right? To have that messiness. And maybe once you have it, you don't want anything else. Luckily, I don't have that from my perspective. So, but in any case, it was quite long. I think the guy played pretty good. DiCaprio was indeed acting very well, but some parts seemed to take a bit long. But was interesting to see it though. Well, yeah, that's a bit of a long movie review, but it was a long movie as well. So crazy though in a way. Well, anyhow, that's my perspective. What do you guys think, and girls? Yeah, I'm reviewing movies now, indeed, Kaylin. It's my addition here. Forex and Hollywood. Ravi says, is questioning why I call that long because recommends trying sitting through an Indian movie. So I wonder how long that will be. Interesting. Veshna is asking about the euro to dollar. Well, I guess the tapering is what happened because technically it looked like a bull flag, but you know the thing is with the bull flags, they sometimes turn into bigger downside, right? So yeah, they instead of break up, they just turn into a downtrend. That sometimes happens. So any hook back in a lower high, if we get there, would be a potential bounce. But don't forget that if this does fall before giving the bounce, then the 786 could be a bouncing spot, or the 886, right? So be aware of that. It doesn't have to give the hook back before reaching those fibs. It could continue to fall and then bounce, right? But Vejna said that it was good news. Let me take a look. But it's more minor news, right? I think yesterday's tapering is more important, I think, than, you know, probably more important than, yeah, German unemployment rate is better, 6.8, but I think the tapering is still hanging over the market in a way. The German unemployment change is negative, good indeed, but I think you know what I mean, right? That's the shadow over it. Adrian is asking how my trades were for yesterday. Let me think. Not so good. I was trading the CAD instead of the Aussie. I wish I should have split it. I should have split some risk on the Aussie because I saw some Aussie weakness yesterday and only traded the CAD. If I would have split some risk on the Aussie weakness, I would have made at least some profit on that. With the CAD, I had a loss and a break even, so that wasn't too good. I mean, nothing drastic, but I mean, not the best for me. I should have split the risk. That was my fault, I think. Otherwise, it would have been okay. But, so let's see how today goes. Well, folks, I guess that wraps it up. If I look at the market in its total, then probably dollar strength. Try to sneak in some dollar strength trade. Or maybe yen strength trade still, like the euro yen, pound yen. Could be some space down still for intraday. And maybe after that, there could be a potential bounce again to the opposite direction. So, same like euro AUD and pound AUD. It's as Adrian said, it's not as, the opportunities are not that great like within my vision, but there could be some space to the downside. So that wraps it up. Well, I hope to see you tonight with the oscillators exposed, and wish you all a great day in the meantime. Cheers, everyone.